All right, ladies and gentlemen, welcome back. We are going to be starting very shortly, so please do take your seats. I hate to interrupt the networking, but time waits for no one, as we all know. Okay, welcome to Plenary 1, where we're going to be talking about the all-important question of investment. More specifically, we're going to be looking at how to unlock investment into the Commonwealth's under-recognized growth markets. I will be asking our panelists to join us shortly, but before we do, we have an opening address from our key sponsor, Zenith Bank, who's going to help to set the scene a little bit. And delivering that address is going to be Mr. Henry Oroh, the Executive Director of Zenith Bank. Henry, please.
Thank you, Lanre. Your Excellencies, distinguished ladies and gentlemen, good afternoon. Good afternoon. Excellent. No, sometimes we need to wake ourselves up. My name is Henry Oroh. I am an Executive Director of Zenith Bank PLC. Today, my job is pretty simple, and that is to deliver the remarks for this plenary session on behalf of my group MD, CEO, Dame Dr. Adora Umioji. So today, I'll be representing her on this plenary session. It is my pleasure to welcome you to this plenary session. This gathering is built on a shared values and a common vision to unlock the potentials of the Commonwealth emerging markets and shape the future of investment across our regions. As the Group Managing Director and Chief Executive Officer of Zenith Bank, I am privileged to set the tone for this important and transformative session. This paper explores the investment landscape within the Commonwealth of Nations, a political association of about 56 member states with diverse economies and shared historical ties. This paper examines the key status of offering investment opportunities and evaluates the economic advantage of intra-Commonwealth trade and identifies the challenges investors face today among the Commonwealth members. This paper will conclude with some recommendations for enhancing investment flows within the Commonwealth. Now, the Commonwealth represents a unique transcontinental economic bloc comprising developed, emerging, and developing economies. Its collective GDP stood at approximately $13 trillion in 2024, with a population exceeding 2.5 billion people. And for me, this is a great market, 2.5 billion people with a GDP of about 13 trillion US dollars by 2024. As globalization and regional economic cooperation evolve, the Commonwealth's potential as a platform for investment and development warrants closer attention. Now, I'll briefly take us through an overview of the economy of the Commonwealth countries. The Commonwealth includes advanced economies such as the UK, Canada, and Australia, as well as emerging markets like India, South Africa, and Malaysia, and also includes developing nations across Africa, the Caribbean, and the Pacific. Studies suggest that bilateral trade costs between Commonwealth members are 21% lower than between non-members, owing to shared legal systems, language, and institutional frameworks. This is a clear advantage that member countries are yet to fully optimize. Embracing their full potentials will enhance connectivity, deepen financial inclusion, and open new avenues for prosperity. The following are key investment opportunities within the Commonwealth. 1, infrastructure development. The Sub-Saharan Africa, South Asia, and the Caribbean require significant infrastructure investments. There's a gap, there's a need in this market. Sectors like transportation, energy, power and energy, ICT, water, and sanitation lack sufficient investment in member countries. So infrastructure is a key area of opportunity among the Commonwealth nations. Another area of opportunity is renewable energy. And high potentials for renewable energy abound in India, with the population of India and their level in development. The requirement for renewable energy abound a lot. It also abounds in Kenya, Nigeria, of course. Nigeria is easily the biggest economy, arguably, in Africa. And there's a lot of opportunity for renewable energy. Ethiopia, another large economy in Africa, and lots of other African countries, as well as countries in the Pacific Island. Investments in solar, wind, and hydro offer substantial returns and support climate goals. Another investment opportunity area is agriculture and agro-processing. Agriculture remains critical and central in countries like Uganda, Bangladesh, and Guyana. Côte d'Ivoire and Ghana are well known for cocoa exports, while Nigeria has a diversity of agro-commodities. The growing demand for food security and agro-value chains presents long-term prospects, and export beneficiation will generate even greater value for members. And the point here is that from Africa and most of the emerging countries, export is basically about raw materials, all right? And there's a lot of gap for investment to generate export beneficiation, value-added exports. And that gap remains unexplored. And that's an opportunity area for member countries of the Commonwealth to look at. Now, the digital economy and fintech is another area for investment. There's a huge gap here. There has been a rapid digitalization in Africa and South Asia. Investment in mobile banking, e-commerce, and digital services is increasing with the rapid embrace of financial inclusion. Another area for us to look at carefully as an opportunity area for investment is tourism and hospitality. The Commonwealth countries like Mauritius, Jamaica, and Sri Lanka are tourism dependent. Not to mention countries like Gambia, Kenya, and lots of others around Africa and around the Commonwealth that depend on tourism. So that's an area for investment. Post-COVID recovery presents opportunities for investment in sustainable tourism. Now, what are the challenges of doing business around the Commonwealth members? Doing business within the Commonwealth presents the following challenges. And I believe that the panel today will probably do more justice to the challenges we're looking at, because the essence of this forum is to look at the challenges, the opportunities, and how we can overcome these challenges and improve investment among member nations. A key challenge for us is political and regulatory risks. And here we're talking about unstable governance and policy inconsistencies in some member states. What investors need is consistency, whether in the parameters, in government, in policies. We need consistencies in policy. But we see a lot of policy somersault around these parts of the world. And for investment growth, that's a significant challenge. As I said earlier, infrastructure deficit remains very high. We have poor logistics and inadequate energy sources that deter investors, especially in the least developed member states. So energy remains very key, and logistics, transportation, movement of goods from the hinterland to the there's still a lot of room for improvement, which means there's a lot of room for very profitable investment in those areas. Now, limited access to finance. We cannot complete this talk without discussing finance. Many small businesses and entrepreneurs lack the capital needed to scale. So finance is a key success factor. But in Africa, we have very huge banks, very well-capitalized banks, and in recent times, we have seen member countries scale up their capital base to support business around the continent and around members of the Commonwealth of Nations. But it's not good enough. I think, Lanre, you made a point earlier that it's not just a problem of capital. It's more like a problem of proper allocation and efficient allocation of that capital among member states. A Zenith bank, for instance, is a easily $20 billion asset. It's easily a $3 billion capital, Tier 1 capital bank outside, operating from Nigeria, with branches around the globe. Capital is there. And what we have done as a bank to overcome this sort of challenge is to see how we can support the small and medium-scale enterprises. And today, as a bank, and indeed, my colleagues here from Africa, do similar projects to support the SMEs. SME scale-up is one of those major initiatives of the bank. Today, we also know that there are a lot of export coming from Africa. However, it's the primary exports. I talk about beneficiation of export. But in our own small way as a bank, we support exporters to see how they can scale up export processing. And for that reason, we do what we call the Zero to Hero program, where we identify young and upcoming businesses, mentor them, sponsor them, and grow them to become mega businesses. And we have very beautiful testimonies along those lines. So financial institutions in member countries will probably need to align and follow such patterns, because the problem is not much of the capital, is a problem of allocation of capital efficiently. So today, limited access to finance is still a problem, and I believe that by the time we are through with this program, we would have made some progress and come out with some strategies, ways and means to delete this as a challenge among member states. Now, trade barriers and bureaucracy. We'll talk about trade barriers. A lot of us will immediately remember tariffs and the rest. But here I'm talking about non-tariff barriers. Despite the low trade costs among member states, non-tariff barriers contribute a lot as one of the challenges we are talking about here. And that is arising as a result of corruption that affects investment flows. There's corruption around, a lot of that around member states. So until we deal with the corruption, until we deal with the bureaucracy, until we improve the ease of doing business, because the ease of doing business index is still very poor around member states. We need to improve on those areas. Now, what are our policy recommendations for us to make progress? The following policy recommendations will improve business growth within the Commonwealth. One, we must strengthen intra-Commonwealth investment agreements. We need to talk to ourselves a little more. Member states, let's see what we have. Today, we discuss around Africa, we talk about the EFCTA, African Continental Free Trade Area, where members are beginning to look at ourselves, and let goods flow within Africa. We're financing ourselves. Payment for goods within Africa is made within Africa without having to go to the US or to London, that is going to the dollar economies. So the Commonwealth nations need to look a little bit about how we can talk to ourselves and strengthen our agreements to promote investment among member states. We need to also enhance investment facilitation mechanisms. All right? Like I said, the ease of doing business index is still very poor. We need to look at how we can check our processes, probably digitalize business registration systems, and make it easy for businesses to come to member states and do business. Then, very importantly, we need to promote public and private partnerships that will foster infrastructure developments and generate innovation through PPP. And of course, that will bring capital and infrastructural improvement among member states. Now, the banks and multinational financial institutions have a role to play in providing financial support to this growth. So in conclusion, investment in the Commonwealth holds promising opportunities due to its economic diversity, demographic potentials, and institutional commonalities. To fully harness these opportunities, governments and investors must work collaboratively to reduce risks and promote inclusive growth. The Commonwealth can serve as a model for sustainable and equitable economic partnerships in a changing global order. This summit is more than a forum for dialogue. It is a launchpad for action. Let us use this to amplify underrepresented voices, highlight impactful investments, and build a legacy of shared progress. As members of the Commonwealth, we have both the responsibility and the opportunity to shape the future. We are bound by common values and collective destiny. By drawing on our unique strengths, we can transform our shared vision into real outcomes, ensuring that the unshaped potential of our community becomes a driving force for exponential economic growth. Once again, ladies and gentlemen, I warmly welcome you to this plenary session for the Commonwealth Investment Summit 2025. And together, we will unlock the future. Thank you. Thank you. Appreciate it.
Grab any of the seats. Okay. Down at the end. All right. Thank you very much, Henry, for helping set the scene. As we're up against the clock, as always, I'm just going to ask the fellow panelists to come up. I'll do quick intros then, and then we'll dive into the discussion. And you can give them a round of applause. All right, Henry, we've already met. Now also joining us on stage, to my immediate left, and I apologize in advance for pronunciation, I'll do my best, Nathalie Gogue, partner at Open Capital Advisors. We have Damian Nussbaum, he's Executive Director for Innovation and Growth at the City of London. And we have Damie Sinanan, Executive Director of the Caribbean Export Development Agency. Thank you so much for joining us on what is a fundamental topic. Now, the way we're going to do this is we'll do a quick round of intros, 1 or 2 minutes each, just to give us a bit of context about your work and where you're coming from in terms of this topic. And an optional question I'm going to throw in there is, if you had to distill, if you had to pick one particular issue that you feel is the major constraint, and I'm going to insist that you pick one, be great to get your thoughts on that as well, and then we can delve into some of the deeper issues that we're going to be talking about. Henry, you're going to skip this round as you've already had the floor. Sure. But Nathalie, your 2 minutes start now.
Ooh, okay. Hi, everyone. My name is Nathalie. Like Lanre said, I'm a partner at Open Capital. So what we do, we're an intermediary. So we sit between the supply and demand of capital, and we're trying to catalyze more private sector growth across sub-Saharan Africa by working with businesses to help them improve their operations, get investment-ready, raise capital, and investors that want to deploy capital in Africa. So in the last 15 years, we've helped mobilize almost $2 billion in capital for African businesses across a lot of sectors that Henry was talking about, so agriculture, renewable energy, water and sanitation, etc. So one issue, I would say, that's a tough one. I think if I have to pick one, I would say integration and collaboration, right? I was going to say access to capital, but Henry's right. I mean, there's money. There's money available if we can work better together around how we deploy that money, how we design instruments that fit, are more fit for purpose, and deploy it. I think there's a lot we can do with that.
All right, see, the benefit of having different takes on this is if everyone picks one, we'll have a nice list at the end.
Yeah.
Damian.
Thank you very much. Great to be with you. So the area that I work on at the City of London Corporation, I head the work that we do on financial and professional services. So that's all about how we can support all of those interchanges between UK financial services and global countries, companies, in order to see win-win outcomes. And I think this is a great example and a great topic to be talking about today. I wanted actually to focus in on some work that we did with the UK government, or in order to influence the UK government, because I think there's something important here that we learned that from other countries and that may be of interest for others too. And that was the point that you made, Henry, about certainty and risk. And one of the things that investors into the UK were telling us, and this is about 2 years ago when we were doing a big piece of work ahead of our election, they said we need to have clarity of direction of where the government wants to take the country. We need to have an industrial strategy, because no country can do everything. You have to make choices, and we need to know what those choices are so that we can come in behind them. If you just say invest in the country, we're going to lack confidence, and it's, the capital isn't lacking, it's the confidence that needs to be there. Having that kind of compelling, convincing industrial strategy allows investors to have a sense of the direction of travel. Not all of them will be keen on the choices being made, but the others will have a sense of, yeah, this is an area that I'm confident in playing in. So you need direction of travel and excellence of execution.
Thank you, Damian. And Damie.
Thank you so much. It's certainly a pleasure to be here. I'd like to thank the Commonwealth for inviting Caribbean Export Development Agency to be here and to be part of this panel. So my organization, Caribbean Export Development Agency, we are the regional trade and investment promotion agency for the Caribbean region. We represent 15 countries, most of which are small island developing states. And when we speak about the Caribbean, we're talking, just like our colleagues in Africa, we're talking about a wide variety of economies. Economies as small as Dominica with 50,000 people to as large as Jamaica with 4 million people. And we are all separated by seas. So as you can imagine, there are a number of challenges in terms of attracting investment. The Caribbean is one of the most vulnerable regions in the world. We are vulnerable to climate change. We are vulnerable to external shocks. We will be vulnerable to the T word. I don't want to pay the £10, so I will say the T word. So we have to put our strategies in place so that we can be resilient in the face of all these global challenges. In terms of attracting investment to the region, I was very glad that this panel is called Underdeveloped but High Potential Markets, because I see the Caribbean as a high potential market. We have a number of competitive advantages that we can attract investment, profitable investments from across the world. The issue, and I'll stick to my one issue, I think is in terms of de-risking and scalability. So I'll combine those two. We have, because we're small countries and small island states, our project and ticket size tend to be very small. We have to figure out a way to up that so that we can attract the high impact investors. And we have to figure out a way to de-risk investments. Unfortunately, with the vulnerabilities that we face, investor confidence in the region may tend to be a bit muted. How can we promote the region as a destination for these types of investment by mitigating the risks that investors would face? So I'll stop there, and I'll be happy to take the discussions further.
All right, thank you so much. So we've identified a few issues here already. Henry, you touched on things like infrastructure deficit, which is kind of self-explanatory in terms of how that holds back investment. The need for clarity, sort of a clear plan of action rather than just a general statement on investing. Cooperation and integration. Just as a quick qualifier, when you say integration, are you talking there, do you mean the Commonwealth as a whole, or do you mean Africa specifically? Because your focus is Africa.
Yeah, so I think it's both, right? So when we talk about the Africa Trade and Investment Mechanism, I think there's a way to integrate there. But I think even beyond, it shouldn't just be Africa. I mean, across the Commonwealth, that also represents an opportunity for better trade.
And then Damie also had the issue of de-risking. Now, there's a lot to unpack here. Before we get into the nitty-gritty to the extent that we can in less than 60 minutes, we have to address the T word again, unfortunately. Now, it's come up a few times this morning, and in general, it's hard to argue with the sentiment that, look, this is an opportunity, right? The world is a big place. There's lots of potential trading partners out there, lots of potential investment opportunities out there. But I would like to just inject a little bit of realism along the lines of you cannot simply dismiss the United States. The CEO of Lloyd's made a very good, I think very important observation this morning, saying that 50% of all the money that flows around the global economy comes out of the United States. Now, it was difficult enough to get your hands on that money before recent events. I'm no economist, so maybe I'm missing something, but surely this is not going to make life any easier. Damie, you're shaking your head. I'd like to get your thoughts on this.
Yeah, no, I mean, I don't think, we all try to be optimistic and say, oh, it presents opportunities, but it's going to be a challenge. And it's going to be a challenge for small economies such as those in the Caribbean region. Most of our imports are from the United States. Most of our exports are to the United States. And with the blanket 10% tariff, I heard some discussions this morning where some people were saying, oh, it's only 10%. 10% is a lot for small island developing states. Our goods and services going to the US are already on the margin of uncompetitive because of the high cost associated in the region. This 10% is going to make things more difficult. Now, I do take the point that, and we haven't even spoken about developmental aid, with USAID canceling all of their projects. Most of the aid that came into the region was from USAID. So it's going to be another challenge that the Caribbean region will face, but it's one that we will face head on. We are resilient. We've bounced back from COVID, we've bounced back from natural disasters, we've bounced back from global financial crises. This is just something that we're going to have to deal with. I mean, it's the way of the world. It is what it is. It's the challenges of being developing economies. We will continue to do what we need to do.
Yeah, I guess what comes out there is we kind of don't have a choice, right?
No, we don't.
We have to figure out how to navigate around this. And there, Damian, I'd like to get your thoughts on what the role of places like the City of London is in that. Now, we're the framing of this conversation is the under-recognized Commonwealth markets, because not all Commonwealth markets exist in the same reality. The UK and Canada and places like India certainly tick a lot more boxes when it comes to, the investor checklist than, countries in regions like Africa or the Caribbean. How does the City of London fit into this in terms of partnership and navigating this, shall we say, uncharted territory that we're in?
I think it's a very wise saying to focus on the things you can control and not to obsess about the things that you can't control. And I think the difficulty with looking at what's happening on the other side of the Atlantic is if we knew at this point that we'd got 10% tariffs across the piece and a lot higher for some, and that was going to be the new normal, people could begin to plan, people could think it would not be ideal for the world economy, far from it, but at least you can plan. I think the huge difficulty we've got is we are in such a fast-moving environment that the idea that people are going to be able to make big investments into certain places where the tariff could go up or down is hard. That means that for those of us in economies like the UK, I think it's even more important that we provide certainty, that we provide predictability. And I think there are some key areas where that is going to be something that our government is going to work very closely with the city on. Whether that's around the transition finance as a key area that I think is really up for grabs in the US, and how they are going to change their approach to transition finance is very interesting. Whereas I think here we've got a very clear approach to it. That's not going to change. We in the city are working with the government on a transition finance council with Alok Sharma chairing it, and one of our members is as the deputy chair. And the council is going to be focusing on how we can have the right kind of products and services that we're going to need globally in order to finance that, $8 trillion per year between now and 2030. So I think focusing in on what we can control and then trying to deal in the best way we can with the parts that we can't.
Do you think it's fair to say that the Commonwealth has become more relevant over even in as short a time period as the last 7 days or so?
Hugely more relevant, yeah. I think that sense of we are a community, a family of nations that know each other and understand each other, and trust is going to be so much more important, and trust is at the heart of the Commonwealth.
Nathalie, you mentioned earlier that over, was it 10, 15 years or so, you've been active, you've mobilized over $2 billion. First of all, well done. I'm sure that wasn't easy. Where's most of this money coming from? Is this locally sourced capital? Is this international investment? How reliant are you on the US in the work that you do?
Yeah, so it comes from both. So we work with a network of about 600 global and local investors. So that's your PE, your VCs, impact investors, high net worth, foundation, DFIs, etc. So for sure, the US and work with USAID, DFC, and some of the US investors for sure. So there is clearly an impact to our work and to the various businesses that we support and help raise capital. So definitely something that, like Damian said, you focus on what you can control. There's certainly diversification, but clearly there is an impact.
What's your immediate response to the events of the last week? And, the tone has been set. I don't think that we're going to sort of return to some sort of, stable, ultra predictable setup. We're less than 3 months into this administration. what's your initial reaction to this, or your initial response of how do we adapt as under-recognized emerging markets?
No, it's a new normal. It's a new era. And we need to focus on what we can control, and we need to adapt. So what we're doing, trying to get a sense of what that new reality is. Because there's a broader impact right beyond the U.S. European countries have to also reshift the amount of capital that they're pushing on aid, because they need to reset their strategy on defense and those type of things. So we need to recognize that is beyond a U.S. problem, or reduction of U.S. funding towards emerging economies. So that's one. Two, I think it's also an opportunity. So in Africa, we've been talking about the need to mobilize more local capital, and it's something we've been talking about, and I think this, probably light some fire beyond that, like how do we unlock, all that money from pension funds and insurance that has been sitting to a certain extent, and push it more into the economy to finance SMEs and drive growth on the continent. So those are some of the things that we're looking at.
Which also brings us back in a way to your point around more cooperation and the need for more integration. Henry, your thoughts on how this new era that we're in, clearly, one way or the other, is going to change the landscape or impact the landscape. You're, by African standards, a big bank.
Sure.
You operate internationally. It's difficult at the best of times to get money into Africa. Do you think it's going to get harder now? How do you see, or what kind of responses do you think are going to be required?
I think the T word, in my opinion, is overflogged. It's overflogged. It's not as bad as it's been made to look. First and foremost, it's a reciprocal tax, all right? So if a country is important for you for trade, you could as well consider your own tariff on that country, say the US, all right? If you moderate your tax on US, because it is reciprocal, the US will moderate their tax on you. So there's some element of control there. But I'd like us to focus on the issues around, I think Nathaniel also spoke around that, on the areas we can control. Today is about building an efficient economy. If we're able to build an efficient economy for member states, our goods will become more competitive elsewhere. And who says you have to sell to the US? Who says you have to trade with the US? You can become autonomous as a nation. You can produce your goods, value-added production. You can sell to other nations around the Commonwealth if you are competitive. That's my take on that. We need to deal with infrastructure, and that's the problem we have. If we start focusing on areas we don't have control, we will lose it. Let's focus on the areas we have control, and that is building an economy that is efficient and that is competitive. And when our goods are good, the Japanese say that that people will beat a bush path to find a product that is viable and good. So that's what I think. I think the tea thing will normalize over time. But right now, how do we survive? We have to survive by improving ourselves, by ourselves. And it said earlier, the Commonwealth members, there is also a huge market, $13 trillion, 2024, 2.5 billion people. That's a huge population. So we can focus on ourselves and leave Mr. T out of this equation. And over time, things will find their level. Thank you.
One of the messages that is implicit in your comments seems to me is that it's nothing personal in terms of these capital flows, which I think it's an important observation to make. That it's not that there's some sort of inherent bias against regions like Africa. But more often it's the case of, well, this is just the checklist. And if you are able to hit that checklist, you might actually be surprised by the response. A country like Rwanda, in some ways, is an interesting example of that. Now, I want to move on to one of the core topics that we have in our brief, which is enough of Mr. T for now. I'm sure we'll come back to him later, which is the role of technology in all of this. We are in a new era, not just in terms of geopolitics, not just in terms of trade relationships, but we are in a new era of technology as well, digital technology. We all know about the advancements in artificial intelligence, and that is going to revolutionize things one way or the other. You're the experts, so you have to help me out with this one. Where does technology, especially digital technology, fit into this picture in terms of facilitating more investment into under-recognized markets? Can it help the process? How so? Any thoughts? Open question to everyone. Damien?
Yeah, I could start. I mean, technology, as it's always been, AI is just another step in where we are. I heard the interesting discussion about computers to internet to AI. You have to adapt to the technologies that it's available. That is, that's the way of the world. It's been going on for many, many years. So I don't subscribe to the fear of AI. To me, AI and blockchain and all of this is another step. In order for us to bet, it's going to play a major role in investments, because investments in technology are going to be absolutely necessary, and technology is going to facilitate investments. So it's a circle as far as I'm concerned. I'll speak on specifically the Caribbean. In the Caribbean region, we have to play catch up towards technology. Sometimes in underdeveloped markets, you are focused on problems that have already been solved. You're trying to catch up. And then you have to catch up to where the technology is going. That requires a cultural shift. It requires persons to embrace technology and not be afraid of it. So we're trying to promote very heavily, face these problems head on and don't hide and think they will go away and think they will have some law that will control AI. There's nothing that will control it. You have to adapt to it. There needs to be the financing to allow small and medium-sized enterprises and to allow small economies to adopt these technologies, because some of it is not cheap. We have to do that. And we have to have the policy environment that allows for the adoption of these type of technologies, to make it easier, to make the legal framework such that persons on the street who are impacted by these technologies can adapt to it. So those are my thoughts on technology.
How do you practically get that financing to the SMEs?
That's a very good question, and I've always said this. I'm going to say it at this forum. Sometimes the funding is available, but it doesn't reach the SMEs. It goes into, there are a lot of consultants in the room, so I don't want to insult anybody, but it goes into a lot of feasibility studies. It goes into a lot of prep work. While all of that is extremely important, we have to close that funding gap, and I think banks, I think governments, and I think investors can play that role in terms of investing in technologies, whether it's on an equity basis. I'm no financial expert by any means, but whether it be funding mechanisms that SMEs can establish, grant funding, equity, angel investments, low risk, low cost capital for SMEs.
Damien.
Thanks very much. Agree with all of that. And I think that the technology challenge has always been there, but it's speeded up. And I think that if we're looking at the next 5-year horizon, the potential for process change to be transformed, for skill set to need to have moved on by a decade, and actually the number of people who are working in some specific areas to be kind of brought right down is going to be huge, and that's going to be right around the world. So I think one of the things, let's start actually from a different end and come to the capital in a minute. The skill set is absolutely critical. Our ability, all of our ability to be able to shape our work rather than be shaped by AI is going to be right at the center of whether our country is successful, whether Commonwealth is successful, whether our companies are successful. And one of the things, just as an example, that we're working on at the moment In the UK, and I suspect this is the pattern elsewhere, the number of women who are working in tech is very, very low. What, sort of 20%? So we've got a program looking at women mid-career, and it's going to be many women mid-career who are going to find that their current roles are going to shift, change, or not be there. So we're looking at a program how you can reskill women mid-career to get into tech and have a different feel within the tech industry. But let's get right to the heart of capital and how that is going to work. I think one of the areas is going to be around blockchain, DLT, that could mean that we have much slicker processes, whether that's around trade, whether it's around tokenization. The way that we're able to buy and sell products is going to transform, and being able to get ahead of that right across Africa, Asia, it's going to give a big competitive advantage. So I think those are some of the areas that are going to see huge shifts over the next few years.
Yeah, maybe to...
Nathalie and then Henry.
Yes, maybe to add to that on the capital side, right, for SMEs, because we see it every day. I think technology is a key enabler, I think, especially for emerging economies, because it allows SMEs to leapfrog and do their work in more innovative ways, in more efficient way. But to your point, they need support and they need capital and so many things to enable them to do that. And I think some of the things that we're seeing, you have new funds and new investment vehicles that are coming in with the tech focus to invest in some of those businesses, which is great. We need more of that. But we also need some catalytic funding and ways for those SMEs to be able to have access to the infrastructure and things that they need, right? So let me give you a case in point. So you have SMEs that are trying to provide low-cost internet, wireless, and whatnot solutions to healthcare companies, to schools, and to do all of the things that we're talking about, right? But that SME, well, it's the asset base is quite huge, right? To lay up the cables and all that infrastructure to provide those services. In developed economies, some of that is provided by the government. In emerging economies, the SME has to do all of that on their own. Who is financing that? Who is enabling them to do that, right? So those are some of the other pieces that need to come in, and to maybe public-private partnerships, right? It's not the funding directly to the company itself, but to provide that enabling environment and that infrastructure that the SME can now tap in to be able to provide some of the services they need to provide.
I think the AI issue is both a promise and a pain, the AI. I rather look at it from the promise side. AI has become very disruptive, obviously, especially generative AI. Today, the computers can do practically everything and probably do it better than a human. You have automation in medicine using AI, in engineering, in banking, of course, it's all there. It's practically 50% of what we use today in our systems. You know, so AI will bring about efficiency, and I spoke around efficiency much earlier. All right, it will bring about efficiency. I think companies may have to do a lot of R&E research, right, to see how they can plug AI into their operations. If you don't embrace it today, you become very irrelevant very, very soon. That is inevitable. All right, so a lot of companies will have to do a lot of research. We talk about capital as a problem. I often disagree with that. All right, it's about setting out your plan and setting out the business viability plan. Once your plan is very, very clear, there are so many banks that are willing and able to finance these projects. And I can tell you that. So we are living in an information age. A lot of people need to look around who offers what. Applied information gives you knowledge. Applied knowledge gives you prosperity. There's a lot of ignorance there. And people just give up once they have a little bit of challenge around capital. Find that institution that funds that project. Find a Zenith bank, for instance. If you come with your project and you show the project, whatever funding that is required to support the automation that is required for that project, you get it. And a host of Nigerian banks do that. So to speak to your question, AI has come to stay, and any business that ignore it will ignore it at its own peril, because that is the way to go.
Just quickly on the point you made that a lot of Nigerian banks are providing capital to local projects. Sure. I see. I knew there might be some divergent perspectives on there, but it goes to the point of the importance of local capital, which is one of your focal points as well, Nathalie. Do you see us heading in the right direction there?
Henry, I agree, but also have to disagree. I mean, I do think that, yes, there has been efforts, and there has been different programs from commercial banks and others to support SMEs. But sitting on, in the middle, I have to say it's not enough, and so much more is needed. And the adequacy of the financial instruments, right? Thinking about, the audience in mind, the SME. So starting the design of those instruments with them in mind, I feel like it's still lacking, and we need to do more.
I think for me, the success of any initiative is the robustness of your feasibility. All right? And I can tell you that entrepreneurs here show that viable feasibility. A lot of people finance it, let alone banks. All right? Yeah. Like I said, I hate to, when businesses focus on areas they cannot control, rather than focus on things you can control to make this happen. Banks are there to support businesses to generate profit. Mm-hmm. And I can tell you, we do a lot of that. Mm-hmm. Today, we have close to 20-30% of our customers using one form of technology or the other. And some of these things are financed by us. And there are so many banks in Africa, in Nigeria, that do something similar. But the thing is, there's a lot of ignorance out there. Mm-hmm. And people don't know where to go to get what. So perhaps a lot of information, a lot of advocacy needs to be probably done by the banks as well, and of course by the government. How would you talk about AI when you don't have good internet coverage? And those infrastructure, the fiber, the network, is all part of the investment we're talking about. And a lot of that probably will have to be done by the government as well. And if forced back to poor infrastructure.
Maybe one thing, right? Because again, I agree with everything you've said. I just disagree on a few things. But I think one of the things you mentioned about the ignorance is also key, because we sit in that middle. That's what we're trying to do, close that gap. And I'll have to say, sometimes people are looking at bank to solve all the issues, and they can't. They're providing a very specific type of capital that fits specific needs of a business. Sometimes that need isn't fit, but it's not the bank, right? You need equity, or you need a blended finance mechanisms, and you need other things. So I think it's really important to recognize that point, let the bank play the role that they need to play. Yes, they can do more, right? But also look at the other sources of capital and type of capitals that SMEs need.
Yeah,
Damie.
No, I just wanted to jump into the conversation too as well, because we have to devote a lot of efforts and resources into making businesses investable, because at the end of the day, the capital is there, and we can have that bank debate back and forth. Lord knows we have, but at the end of the day, sometimes SMEs have to become investable. They have to put things in place to become investable, and they need that support. I mean, I've seen many businesses, profitable, wonderful businesses, but again, they're not investable, whether you put them in front of a bank or you put them in front of an angel investor. And I think investor and project packaging is something that needs to be focused on in under-recognized markets.
I guess the message is if you want investment, be ready.
Be ready.
Investment, right?
Yep.
Which is not as self-evident as it might sound.
And maybe just to sort of lead on from that, whether that's investment into businesses or actually investment into infrastructure and projects. And one example of that, because I think we had this very strong sense of the importance of investable projects, and there was this constant, why are you not investing more? Why are your projects not more ready? And it just, bounces to and fro. Was to put together a project with the Indian government, so Commonwealth nation, about a year ago. And this was UK-India infrastructure bridge. And the idea is to look at some of the key projects that the government in India is wanting to drive forward, and to look at the aspects that will make it investable, looking at every aspect. So that could be from making it insurable, making sure that the sequence is working, and doing it in a really practical way. So we have a series of projects. We're going to be talking to the Indian government in the next kind of couple of weeks, but it's making it practical so that you can then see what works. And one of the things we want to do as part of this project is then to draw from that, what are the learnings that we could take elsewhere to have that conversation and make sure that some of the amazing specialisms that are within half a mile of this building are being used to ensure that we're seeing the investment flows that we all want to see.
Yeah.
Yeah, quick points, because we only have a few minutes left, and there's one last thing I quickly want to cover, but please, I don't want to jump in.
Yeah, no, I wanted to tie the 2 points, right? Because we say, let's get practical and we need companies to be investment ready. So what does that mean, right? So when you say, you tell that business, be investment ready before you go to a bank, before you go to an investor. It's practically from an SME perspective, what we tell them and what we work with them to do is like 6 key things, right? So one is you have to have strong business fundamentals. 2, looking at the financial management of the business, right? So 3, what's the track record, proof of concept that the business has? 4, looking at the leadership and governance, right, of that entity. 5, looking at things around regulation and tax compliance, and then 6, more increasingly, the impact. Social impact, ESG, and things like that the company has. And I think that framework is really important, and different investors, different advisors have structured it a bit differently, but at the end of the day, that's what it comes down to. Are you solving a real problem? Is there scalability? What's your value prop? How you position against competitors? Do you have a strong team? Do you have governance? Are you paying your taxes? From and regulatory, and what track record have you had, and what's that projection looking like? So just wanted to add that to bring it a bit more in terms of practical terms.
Right, we could go on. There's a lot more to this.
Yep.
It goes without saying. We have to wrap up. Now, we've been very responsible. And we focused on the difficult things, the hard things, the challenging things. I want to wrap up by talking about the opportunities briefly, right? And I just want to give everyone the opportunity, spend a minute or so talking about where do you see some of the biggest opportunities when it comes to under-recognized Commonwealth markets and emerging markets in regions like Africa or the Caribbean. Anyone want to go first, or should I pick? Yeah, Damie.
Yeah, I seem to be volunteering to go first all the time, so why not? So in the Caribbean region, I mentioned at the start that we have to focus on building resilience. And the 3 key sectors that I believe are absolutely necessary and present a tremendous amount of opportunity for investments are green economy transition. Energy costs are some of the highest in the world in the Caribbean region, and we are one of the most climate vulnerable, so that checks those 2 boxes. There's a lot of investment opportunities available in the region, wind, solar, and water as well. So green economy transition presents a huge opportunity for investments. Second one, we spoke about it, digitalization of business and digital technologies. Again, competitive advantages in the region and the impact that it can have on building resilience and economic development, I think it's a major source of opportunity. And the third one, sustainable agriculture. Caribbean imports over 90% of their food. We see supply chain disruptions all the time. For example, I live in Barbados. For a couple of weeks, we couldn't get milk. Over the Christmas, we couldn't get chicken. That's a reality that we face. To keep ourselves fed and to keep us sustainable, we have to invest in sustainable agriculture. And there are a number of agriculture technologies that are available. So those are the three that I would say present a tremendous opportunity for investment within the region. And not only in the Caribbean region, but developing and under-recognized markets across the Commonwealth as well.
Fantastic, thank you.
It's hard to go better than that, so I won't even try. But I think what...
That's why you should go first.
Where you go first. But I think that underpinning that and the great opportunity is to say, how do you make sure that as you're putting in the infrastructure, as you're thinking about the agriculture, as you're working on the digital piece, you're going to need to have the underpinning insurance. And the insurance is so key, the invisible piece that provides the safety net, but it's so key to ensure that you're seeing the capital flows, because without that underpinning insurance, and just take the issues around cyber, if a country's system completely goes down because of a cyber attack, you have to make sure that you've got the support and you can make sure that you're going to be able to repay all of those losses. So I think the insurance piece and being able to work in partnership across the Commonwealth, and particularly with some of the institutions here, I think you had them earlier in the day, is going to be a key underpinning for those opportunities.
For me, I would say from Africa, the area that I see as a viable opportunity anytime is an area of growing our infrastructure, right? Mm-hmm. It's infrastructure. The supply chain is poor because we don't have efficient transport systems, no rail systems, and there are no efficient shipping channels. For me, these are areas where investors can plug in quite easily. You can come under a concessioning system, all right, and in a few years, you can get your money back, all right? So infrastructure is key. Africa is largely an agrarian economy, all right? And I spoke around this earlier. There's still a huge opportunity for value-added exports out of Africa. We can create value out of the primary goods that we have, and that entrepreneur, that country, that investor that is able to plug into that quite easily, early, can make a whole lot of money from that continent. There's a whole lot of trade that goes on, a lot of import of finished goods. We can produce those goods locally and export to other countries. So for me, that's a huge opportunity. And the issue around infrastructure and the problems we are talking about today, I believe that we all have a role to play. The government itself, the banks, and even the businesses, we all have a role to play one way or the other. There's a lot of room for improvement, and we all need to raise our game to see how we can plug into the various opportunities around, apart from Africa, the Caribbeans, we have opportunities around the Commonwealth nations. So it's for us to, like I said earlier, go beyond this as a dialogue and see how we can take it to the next level and put capital on ground to develop the opportunities that we have.
So two things from me. One, a point I made earlier, and the second, a new point. So I think the local capital mobilization is a huge one for me, right? Because especially in the times that we're in, we need more money and deploy more capital if other sources are going to come down. So we need to be able to unlock more capital locally. So not just in terms of quantity, but even I think it's an opportunity because it allows us to design instruments that are more fit for purpose for the needs of the continent. So when we're talking about local currency investment vehicles, when we talk about vehicles that understand the local context, the local nuances, right? So unlocking local capital allows us to do that. So for me, I think that's a huge opportunity for the continent. And then second, I'll be remiss not to talk about gender being an opportunity for us. So Africa is the continent where more women than men choose to become entrepreneurs. But they remain micro, they remain nano, and there's just no way we can achieve our full potential if they don't achieve their full potential. So we need to support them and provide financing, provide, network and all those things that they need so that they can grow, create more jobs, solve all the problems we're talking about in terms of food security and things like that, because they're active in all those sectors. So for me, those are the two: local capital mobilization and supporting women entrepreneurs achieve their full potential.
There's no shortage of challenges out there, but I think it's a good note to end on the message around opportunity, which echoes the conversations that have taken place throughout the day. No one's saying it's going to be easy, certainly not, but the stage is set, and it's being set by Mr. T at the moment out of the White House. And let's not ever underestimate the power of not having a choice.
Yeah.
Because one way or the other, we're going to have to
We
make
have to
this
adapt.
work, and there's absolutely no doubt that the opportunities are out there. Ladies and gentlemen, please join me in thanking the panel for an excellent discussion. And I have very good news, it's lunchtime. We'll be back here 10 to 2 p.m. So have a good lunch. Thank you.